Okay, so you're here listening because you want to level up your money game, right?
Yeah, figure out those smart moves everyone's talking about.
Exactly, but without getting lost in like a mountain of spreadsheets and financial jargon.
Yeah, that's what this is all about.
This deep dive
Yeah, we're going deep.
to give you a clear path to making those everyday finances work harder for you.
We're looking at all the tools you're probably already using credit cards.
Savings accounts.
Even some apps that'll help boost that credit score. And the goal to walk out of here.
With a plan.
Yeah, like a step-by-step guide to making your money smarter.
So let's start with something pretty much everyone uses.
Plastic?
Credit cards.
Those little rectangles.
Yeah. Our research showed us that Discover and Chase are real contenders if you're looking for rewards and a solid credit history.
Yeah, Discover's often a great starting point, especially if you're new to the whole rewards game.
That's
No annual fees on a lot of their cards, like the Discover It cashback.
right off the bat, you're saving money. But it's not just about dodging fees.
No, it's about getting that cash back.
Right, Discover's got this program where you earn 5% back on purchases in specific categories.
Each quarter, they switch it up.
Restaurants,
Home improvement,
stuff you're probably already spending on.
up to $1,500 in spending.
Yeah, so like January through March of 2025, it's restaurants and home improvement stores.
Think about it if you're doing a kitchen reno or eating out a lot. That adds up quickly.
Oh, for everything else.
It's a steady 1% back.
Not bad.
And here's a little kicker for new cardholders.
They've got this cashback match thing in their first year.
Basically, they double all the cash back you earn.
No cap.
So say you earn $200 in cash back your first year.
Boom, another 200 on top.
Basically a year of free money.
I like that free money.
Now, for those big purchases, or if you're trying to pay off some existing debt,
Credit card debt.
Discover offers 0% introductory APR for 15 months.
On both new purchases and balance transfers.
Yeah, so that initial period gives you some breathing room to pay things down without those interest charges piling up.
But remember, the interest rate does go up after 15 months.
So you gotta have a plan to pay it off.
Definitely. And if you're a globetrotter?
No foreign transaction fees with Discover.
So no sneaky extra charges when you're using your card abroad.
And if you're just starting out building credit,
Or maybe you're trying to rebuild.
Discover has some good options.
Student cards.
Secured cards,
They report your payment history to all the major credit bureaus.
which is super important for establishing that good credit score.
Yeah, and they have a really good reputation for their customer service.
Plus those security features like FDIC insurance for linked bank accounts.
And free credit monitoring.
Definitely worth considering.
Okay, so now let's switch gears a bit and talk about Chase.
Now, while Discover is all about simplicity and those no annual fee options,
Chase is really known for its flexible rewards program.
especially if travel is your thing,
Right, the Chase Sapphire Preferred Card.
that's a prime example.
Yeah, if you love to travel.
Their earning structure is pretty attractive.
5 times the points on travel booked through Chase.
3 times the points on dining.
And streaming services.
Then 2 times the points on all other travel purchases.
But the real magic happens when you transfer those points to their partner airlines and hotels.
Wow, you can get so much more value for your points that way.
Like free flights, upgrades to nicer hotel rooms.
Yeah, experiences you might not have been able to afford otherwise.
And Chase often throws in these really tempting welcome bonuses.
You might see an offer for like 60,000 bonus points after you spend a certain amount in the first few months.
60,000 points could easily translate to $750 or more in travel.
Plus, the Sapphire Preferred comes with perks like primary rental car insurance.
And trip delay coverage.
Yeah, those can really come in handy if your travel plans go a little sideways.
And like Discover.
No foreign transaction fees.
So you're good to go wherever you're jet setting off to.
But Chase also has cards that are great for everyday spending.
Like the Chase Freedom Flex.
That one also has those rotating 5% cash back categories.
Up to that $1,500 quarterly limit.
Plus 3% back on dining and drugstores.
So you can see how having both a Discover card for those specific bonuses and a Chase card for travel and everyday purchases.
Could be a pretty powerful combo.
Right. And this is where the whole Chase ecosystem really shines.
They let you link your different Chase cards together and combine all those reward points.
So those everyday rewards you're earning on the Freedom Flex can become even more valuable.
When you pool them with your Sapphire Preferred points and use them for travel,
And they're also big on security, just like Discover.
you can feel good knowing your information is safe.
So one smart approach could be using your Discover card for those specific quarterly bonus categories.
You know where you'll be spending the most.
And then using a Chase card for your regular dining and travel expenses.
To really maximize your rewards potential.
Exactly. But there are a couple things to remember.
The Chase Sapphire Preferred does have a $95 annual fee.
So you'll want to make sure those travel rewards and benefits you're getting are actually worth it.
Definitely. And with Discover, you absolutely have to remember to activate those 5% bonus categories each quarter.
Otherwise,
You're stuck with that standard 1% back.
and of course, the golden rule with any credit card,
Don't overspend.
and always,
Pay your balance in full every month,
so you don't get hit with those nasty interest charges.
because those can wipe out any rewards you've earned.
So if let's say you're maximizing your credit card rewards and maybe even saving some money with that 0% introductory APR.
Where should all that extra cash be working for you?
That's a great question.
And it leads us to our next topic, savings accounts.
Our research kept pointing us to Digital Credit Union, or DCU.
Yeah, they're a really attractive option for high-yield savings.
Okay, so tell us about DCU.
The first thing that jumps out is their APY, their annual percentage yield. As of 2025, their primary savings account was offering a whopping 6.17% on the first $1,000 you deposit.
Wow. 6.17%.
Yeah, to put that in perspective, the national average is usually hovering around 0.5%.
That's a huge difference.
Huge.
Your money's going to grow way faster with DCU.
And what makes it even better is how accessible it is. You only need $5 to open an account.
$5.
Yep. And there are no monthly maintenance fees eating away at your balance.
I like that. No fees.
Plus, as a credit union, DCU offers some nice member benefits.
Like what?
Potentially lower interest rates on loans if you need one down the line.
And they often have free financial education resources.
Which can be really helpful.
Definitely. And in this digital age, convenience is key.
Oh, absolutely. DCU has online banking and a super user-friendly mobile app.
So it's really easy to transfer money back and forth between your Chase or Discover accounts and your savings.
Makes everything super streamlined.
And of course, your money's safe with DCU. They're insured by the NCUA.
Up to $250,000.
That's the same peace of mind you get with FDIC insurance at traditional banks.
Now, there are a couple of things to keep in mind with DCU.
Okay, the like what?
That amazing 6.17% APY, that only applies to the first $1,000 in your savings.
So what happens after that?
After that, the interest rate drops to 0.15%.
Oh, okay.
So if you have a lot more than $1,000 saved up.
You might want to look into other high-yield options for the extra money.
And as a credit union, DCU generally has fewer physical branches compared to those big national banks.
Right, but with such great online and mobile banking options.
It might not be a deal breaker for most people.
Okay, so now you're earning those credit card rewards and your savings are growing like crazy.
What about those everyday situations where you need to send money to friends or family?
Right, like splitting the bill at a restaurant or chipping in for a gift.
Exactly. Well, our research found that Cash App, Venmo, Zelle, and PayPal are the most popular and reliable free transfer apps.
Those are all pretty familiar names.
They've become essential for a lot of people.
So let's take a quick look at each one.
Sure, Cash App allows free standard transfers.
Great.
And they also have an option for instant deposits if you need the money right away.
But there's probably a fee for that.
Yeah, usually a small fee, but it's there if you need it.
Makes sense. And they even give you a debit card linked to your Cash App balance.
Yep, and you can even dabble in stocks and Bitcoin directly through the app.
Wow, that's pretty versatile.
Then there's Venmo, super popular for peer-to-peer transfers.
Yeah, especially with younger folks.
It's free to use when you link your bank account or debit card.
And they have those cool social features.
Yeah, you can easily split bills with friends, add little notes and emojis.
They're even getting into tap-to-pay options at more and more retailers.
Yeah, it's becoming a more well-rounded payment platform.
What about Zelle? How's that different?
Well, Zelle is often built right into your existing bank's mobile app.
Oh, so like you might find it within your Chase app.
Exactly. It lets you make free and usually very fast bank-to-bank transfers.
So you don't need to download a separate app or create a new account.
Super convenient.
And then there's PayPal, the OG of online payments.
Been around forever.
Right. They offer free transfers when you use your bank account or debit card.
And they have a truly global reach.
Which is great if you need to send money internationally.
Yeah. They also offer some buyer and seller protection for certain transactions.
So it could be a safer way to pay for things online.
Definitely. And what's interesting is how easily these apps connect with all the other financial tools we've been talking about.
Right. You can usually link your DCU savings account and your Chase and Discover cards to most of these platforms.
Makes everything feel very integrated.
Yeah, it's worth noting, though, that most of these apps charge fees if you use a credit card to send money.
Usually around 3%, so it's something to keep in mind.
And some might have a small fee for instant withdrawals too.
Yeah, and another thing to remember with Zelle is that its functionality depends on whether your bank is part of the Zelle network.
Good point. But probably most major banks are.
Yeah, most are, but it's always good to double check.
And a really important point with all these money transfer apps.
Security.
Yeah, you've got to be so careful about scams.
Only send money to people you know and trust.
Absolutely. Even though these apps use encryption and fraud detection.
Your own awareness is the best protection.
Okay, so you're managing your spending with those rewards cards, your savings are growing at DCU, and you're sending money with ease.
Now let's talk about the long game.
Investing.
Making your money work for you even harder.
Our research uncovered a bunch of different investing apps.
Yeah, each with its own strengths and catering to different types of investors.
We saw Webull Robinhood, Moomoo First Trade, Public Dough, M1 Finance and Capital.
Wow, that's a lot of options.
It can feel overwhelming, but it's actually a good thing because it means you can find one that really aligns with your investing goals.
And your comfort level.
Exactly. For example, Webull and Moomoo seem to be geared towards more active traders.
They've got those advanced charting tools, real-time market data, and even extended trading hours.
Then you've got Robinhood and Public, which are super popular for their user-friendly interfaces and commission-free trading.
They also let you buy fractional shares, which is awesome if you're just starting out and don't have a ton of money to invest.
Yeah, you don't need hundreds of dollars to buy a share of a company you believe in.
And Public even has a social investing aspect, so you can see what other investors are doing.
That's interesting, kind of like a community of investors.
Exactly.
Trade is another good option for beginners.
They offer commission-free trading and don't have any account minimums.
And they also give you access to mutual funds, which some of the newer apps don't.
Yeah, that's a nice bonus.
And then there's Dough. They really focus on education for new investors.
Commission-free trading and even some curated stock picks to help you get started.
So it's like having a little guidance along the way.
Exactly. Then you've got M1 Finance, which is all about automation.
Okay, so how does that work?
You create a portfolio based on how you want your assets allocated, and then the platform automatically invests and rebalances for you.
So it takes the guesswork out of it.
Exactly. And they also support fractional shares.
And then there's Capital, which has a really unique approach.
They're all about goal-based investing, and they let you set up rules to automatically invest small amounts of money.
Like rounding up your spare change from purchases.
Yeah, it's a cool way to invest without even thinking about it.
So many cool options to choose from.
And a lot of these platforms offer incentives for new users, like free shares of stock when you sign up through a referral link.
So you can start investing with a little bonus right off the bat.
Exactly. And funding your account is usually really easy.
Yeah, they usually offer free electronic transfers, so you can move money from your DCU savings account or even your Cash App or Venmo balance.
Makes it super convenient.
And I love that so many of these apps let you buy fractional shares.
Yeah, it really lowers the barrier to entry for investing.
You don't need a lot of money to get started.
And being able to automate your investments is super helpful for building wealth over time without constantly checking the market.
Right? It just happens in the background.
And it's good to remember that you can usually sell your investments anytime you need to access the funds.
Although the value might have gone up or down since you invested.
Exactly. That's the nature of the market.
Of course, we do need to acknowledge that investing always carries some level of risk.
Yeah, the market can be unpredictable and you could lose money on your investments.
That's why it's generally recommended to diversify your portfolio.
Don't put all your eggs in one basket.
Right. Spread your investments across different types of assets.
And it's always wise to start with a smaller amount and gradually increase your investments as you get more comfortable.
That's a good rule of thumb. And it's also good to know that most brokerage platforms are covered by SIPC insurance.
Yeah, that protects your investments up to $500,000 in case the brokerage firm goes under.
So you have some peace of mind knowing your money's protected.
Exactly.
Okay, so we've covered strategies for spending, sending money, and investing.
There's one more piece of the puzzle that's really important for your overall financial well-being.
Building credit.
Yeah, having good credit opens up so many doors.
Lower interest rates on loans.
Easier approval for apartments.
Even better car insurance rates.
Our research led us to some interesting tools specifically designed to help you establish or improve your credit history.
Like what?
We saw Self-Kickoff, First Card Step, and Current.
Those are some new names.
Yeah, they're all innovative approaches to building credit.
Okay, so let's break it down.
Sure. Self offers what they call a credit builder loan.
Okay.
It's basically a small loan that you take out specifically to build credit.
So how does it work?
You make regular monthly payments, maybe $25 a month, and at the end of the loan term, you receive the total loan amount, maybe $500 in this case, in a certificate of deposit.
So you're basically paying yourself.
Exactly. And the key here is that your payment history on this loan gets reported to the major credit bureaus.
So you're building a positive track record. Interesting. What about Kickoff?
They offer a small revolving credit line, maybe around $750, with a super low monthly payment, like $5, and no interest.
So you're basically just proving that you can make those small, consistent payments.
Exactly. And those payments get reported to the credit bureaus.
So you're building credit without paying a ton of interest.
Yep. First Card is a secured credit card option.
So you have to put down a security deposit.
Right. It's a good starting point if you have no credit history or if you're rebuilding your credit.
And what's cool is that they offer cash back rewards up to 1%. In some cases.
Which is pretty rare for credit building cards.
Yeah, that's a nice bonus.
And they may have more flexible application requirements than some other cards.
So it could be easier to get approved.
Then we have Step and Current, which are really geared towards younger folks.
Okay, tell me more about those.
Step offers a debit card for teens that actually reports activity to the credit bureaus.
So teenagers can start building credit early on.
Exactly, sets them up for success in the future.
That's a great idea. What about Current?
Current also offers a debit card, but with features designed to help users build credit.
And they often don't have minimum balance requirements.
Makes it easy to get started.
So the main thing with all these tools is that they report your payment activity to the credit bureaus.
Yeah, that consistent reporting of on-time payments is what gradually builds that positive credit history.
And improves your credit score.
Exactly. But it's important to note that some of these tools might involve fees.
Like Self and maybe First Card.
Yeah, so it's essential to read the fine print before you sign up.
Definitely. And as with any credit, product missing payments can really hurt your credit score.
Yeah, so setting up automatic payments can be a lifesaver.
Okay, so we've covered a lot of ground here.
We have.
Let's take a minute to see how all these pieces fit together.
Yeah, let's paint a picture for our listeners.
Imagine it's the beginning of the year and you're using your Discover card at restaurants and home improvement stores.
Racking up that 5% cash back.
Then you use your Chase Sapphire Preferred for a weekend getaway.
Earning those travel points.
And all that cash back from Discover. And maybe even some of those travel points gets transferred to your DCU savings account.
Where it's earning that impressive interest.
Then you go out to dinner with friends and use Cash App or Venmo to split the bill.
Easy peasy.
As your savings grow, you decide to start investing through Robinhood.
Maybe using that free stock you got for signing up.
And in the background, Self or Kickoff is quietly helping you build a solid credit history.
All those pieces working together seamlessly.
It's like a financial symphony.
You're spending smarter, saving more effectively, managing your money with ease, growing your wealth, and building a strong financial foundation.
All at the same time.
Exactly.
That's the power of having the right tools and knowing how to use them.
So you've now got a much clearer understanding of how to optimize your everyday finances.
We've shown you specific tools and strategies for credit cards, savings, money transfers, investing, and credit building.
All based on the research we've done.
So here's a final thought for you to consider.
What one or two of these tools could make the biggest difference in your financial life right now?
Maybe it's finally opening that high-yield savings account or checking out a rewards credit card.
Whatever it is, we encourage you to take that first step and start exploring.
This deep dive is just the beginning of your journey to financial well-being.
Take control and make your money work harder for you.
Thanks for tuning in to the deep dive.
See you next time.
Turn on your invested funds. If you loan me a $20,000 sum, I will personally ensure a 10% return every year, with the money automatically zelled back to you monthly for 2 years. This is a fantastic chance to grow your investment with minimal risk, as your funds will be returned every month without fail. If you enjoyed this content, please like, subscribe, follow for more updates, and don't forget to sign up for the exclusive bonuses down below.
Listen up, traders, it's your lucky day. Quick gains insights is here to stay. Subscribe now, come join the fray. Financial wisdom will light your way. Join Quick Gains Insights today. Like this video, pave the way. Sign up in the description, without delay. 4,000 free insights today. Like this video, pave the way. Sign up in the description without delay. 4,000 free, let's slay.